This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to follow a cautious advance on Wall Street. Traders looking past higher oil prices, even with the Iran war showing no sign of de-escalating. Treasury yields slip ahead of tomorrow's Fed decision. President Trump slams Japan, Korea and Australia as well as NATO for rejecting his appeals for help in the conflict. And Trump says he expects a postponed summit with China's Xi Jinping to happen in 5 or 6 weeks, with the Iran war looming as a point of tension.
And Heidi, we are getting some more positive tailwinds coming from the Wall Street session, especially from some more positive commentary coming out of Nvidia CEO Jensen Huang about AI revenue topping $1 trillion, ramping up the manufacturing over in China. So we'll be watching in the Asia session a lot of those tech stocks, semiconductor AI related names. We're already seeing the Nikkei futures pointing to the upside of 0.1%. Of course, there's a big day in Japan on Thursday with the Bank of Japan policy decision at a time when we also have Prime Minister Takaichi meeting with President Trump, and of course, very much in focus, any sort of support coming from Japan when it comes to reopening the Strait of Hormuz. We're seeing the Japanese yen holding at that 159 level against the US dollar. We had a very solid 20-year auction here in Japan, so do watch out for JGB's trading session today. We're also getting the unemployment figures out of South Korea, and we are seeing the labor market there tightening a little bit more than expected, the rate falling to 2.9%. Economists had expected 3% to stay in line with what we saw the previous month. We had seen that upside when it comes to Korean stocks because of the tech sector. You can see futures were pointing to the upside. The Korean won, though, in focus, very close to that 1,500 level. And do keep an eye on the Aussie dollar. Of course, we had the RBA, Heidi, hiking rates back to back on those inflation concerns because of the surge of oil.
What was really interesting, I thought, was this sort of return of the haven demand for the dollar, right? That pullback, if you can call it that, really didn't last very long. But we're watching, of course, for the Fed, and that's going to have implications for treasuries. Perhaps not as big as the implication when it comes to oil, though. Taking a look at where we're trading at the moment in terms of pretty holding steady at the moment for New York traded crude in that last trading session. We are also seeing just some of those modest gains across US stocks as we continue to, of course, look for signals as to when and how this conflict might come to an end. President Trump, in the meantime, lashing out at allies who've rejected his appeals for military assistance in the war with Iran. He singled out Japan, Australia and South Korea in a post on Truth Social, even while saying that the US doesn't need anyone's help. Trump is also stepping up his criticism of NATO.
So I think NATO's making a very foolish mistake. And I've long said that, I wonder whether or not NATO would ever be there for us. So this was a great test because we don't need them, but they should have been there. The other thing is, and I think, very important, we didn't have to be there for Ukraine.
Let's bring up Bloomberg editor Michael Heath. Mike, it's not the first time, obviously, that President Trump's been critical of NATO or even critical of individual allies, but there was no real expectation that any of these traditional allies were going to step in.
No, Heidi, but I think what's interesting is they normally, we've seen in Trump's second term, they normally try to sort of skirt around it and indulge the president to some extent, but this time they've been really direct. It's just like, no, and the idea being, this is your war, you chose it sort of thing. But I think there's something deeper there, that they now recognise that trying to placate Trump, trying to do things that, show that they're willing to help him, etc., it doesn't lead to any influence over him or any ability to negotiate or to talk before doing these things. He's going to go unilaterally no matter what. So there's just no upside for them. And at another level too, the risk of refugee flows, of economic fallout, all these sort of things, Europe thinks that it's probably got enough to deal with already there. And in the case of someone like Australia, the government here maintains that they haven't actually had a formal request for assistance. So it's sort of a bit surprising to be singled out there when the US has actually said, will you send ships over formally, as is usually done. So not a lot of surprises there that they haven't responded. And President Trump, it's almost one of the politicians in Australia described it as quite a petulant response. I think that's a fairly accurate way to describe it.
In the meantime, a pretty major win for Israel and the US in terms of the security chief being confirmed as being taken out.
Yeah, look, I mean, and Israel's in its security forces, its espionage is extraordinary here with, with the death of Larijani, who was obviously, one of the more pragmatic figures in Iran and very influential, was influential in the 2015 nuclear deal as well. So he and his son have been confirmed by Iran as being killed. But the reality is, as we saw with the taking out of the leadership on the first day, and we've seen this in Gaza as well with Hamas. You take out the leadership, other people will follow. I mean, this is a war, and this is a regime with pretty deep roots. Even though it's deeply unpopular with its own population, nonetheless, the regime, the state is still fairly strong. It seems from the outside at this stage anyway. So definitely a psychological victory and uncomfortable for Iran, but I'm not sure it changes the overall status.
And Mike, we're seeing more pushback against the war in Iran within the United States. A top counterterrorism official saying this, that sending the next generation off to fight and die in a war that serves no benefit to the American people was not what he wanted to see, and that Israel had actually dragged the U.S. into the conflict. So can we expect more voices to come out within the United States? And would this make a difference, especially given that Joe Kent, as I remember, he was a Trump loyalist?
Yeah, Shery. I mean, there's quite a bit of discussion on this, and the notion that the US was somehow dragged into this by Israel, and there's a bit of a change, I guess, in perception in Israel. Certainly, the Democrats have sort of put a bit more distance between themselves and Israel, and we've seen it with some of the more influential media voices. Tucker Carlson's often mentioned too as being quite critical. Whether this actually influences things, it's unclear. I mean, Trump was fairly dismissive of this resignation, and it's adamant that Israel didn't drag the US into there. But as the war goes on, and as the goals remain, very unclear, and what the fight is genuinely about, how the US was lured into it or decided to go into it in the first place, there's just a lack of clarity there. There is going to be more doubts, particularly, as long as the regime remains fairly stable in Iran. And as I've said before, all they have to do to win is to survive, really, whereas the US and Israel, they really need to get a successful ending to it, end to the nuclear program, ballistic missiles, these sort of things. So there's a lot more at stake, obviously, on the US side in doing this and getting it done.
Well, President Trump justifies entering the war, saying that Iran was close to acquiring a weapon. What do we know?
Yeah, well, I mean, that's been said for a long time. I mean, when Prime Minister Netanyahu of Israel went and addressed the US Congress after the deal in 2015, he was saying similar things. So, look, it might be true. I mean, this is the areas of espionage and assessments from outside of from security agencies and these sort of things. So it might be true, it might not be true. We really don't know. I mean, you only have to hark back to 2003 and the Iraq invasion when no weapons of mass destruction were found to have a degree of scepticism about that. But you never know. Certainly for Israel, Iran always remained an existential threat. For the US, I guess it's a bit more questionable.
Bloomberg editor Michael Heath there with the latest. And let's take a look at the market implications. And it is, of course, looking ahead to that Fed decision, widely expected to hold rates tomorrow. Investors set to focus on Chair Jerome Powell's policy signals as energy prices soar. Bond traders have already scaled back some of their aggressive bets against Fed cuts. Let's bring in Garfield Reynolds, who, of course, leads our Markets Live Asia coverage. And are we seeing this sort of second-order effect of monetary policy being trumped, if you will, by geopolitics?
Well, it's actually very difficult to work it out until we get some commentary from the Fed. Much of this war has occurred with the Fed in its quiet period leading into this meeting. So how they are going to adjust their outlook, what they're going to say, and in particular what Jerome Powell then says about what they're going to be watching and how they're going to respond. We had a similar sort of question coming out of yesterday's RBA meeting, where the RBA did hike as expected, but the fact that it was a tightly split decision and that the RBA governor was fairly measured in how she talked about things and was stressing, in her case, that what they were doing was about sort of the existing inflationary pressures and that they were watching both angles for the war. So if we get Jerome Powell saying a similar thing, it's like, well, we're worried about inflation, but we're also worried about growth. How markets jump on that is a very open question. There could be a much more volatile post-Fed market response than we've had for some time, because we really are unsure about how the Fed's going to look at it and about how the market's going to respond to that.
Yeah, Goldman seems to think when it comes to yields, the risks are tilted toward the downside because of that concern over the growth picture, right? I mean, are we seeing recessionary risks pop out now, or how long does it take for oil prices to stay elevated to actually hit growth?
Well, you would think oil prices would need to not just stay where they are, but move significantly higher to severely dent the growth outlook. One of the things that has been bubbling along under the surface is that the AI boom is still there. It's still rolling on. You've got lots of investment coming. You've got Jensen Huang talking about $1 trillion of AI chip sales. That's an important point to be remembering. And honestly, the economy, the global economy, as well as the US economy, bounced back remarkably well from the shock of the tariffs, which, by the way, is still working its way through the global economy. Now we've got this other shock. Is this going to be something that ultimately knocks the AI boom out of its comfort zone? Again, we need to know how long is the war going to last and what level of workaround are supply chains going to be able to come up with. The Russia-Ukraine war is the analog here. That's still going 4 years later, but the global supply systems have moved on from that. You can argue that the Gulf is a little bit more important than Russia for a lot of those supply chains, but all the same, will the global economy be able to ultimately cope with that shock?
I am curious as to whether Fed officials will be able to kind of regain control over the narrative for treasuries, because that's almost been purely trading alongside oil, right?
Yes.
Do you think that's likely to happen, or is that still going to?
A lot there does depend on, does oil remain stable? Over the next couple of weeks, if oil continues to just hang around this $100 a barrel, if we get this gradual easing, as it were, in the intensity of the war headlines at the very least. There's talk that Iran's missile launches have come right down. It's mostly about drones. You've got some ships trickling through that Iran is letting through from the Strait of Hormuz. And you've got less chatter from the US about extreme strikes. Israel, of course, keeps on killing people, but you've got what markets are regarding as a calmer setup. If that sustains and if oil remains where it is or eases down a little bit, then I think the Fed will become more to matter for treasuries. But if we get something that's an escalation which sends crude up noticeably back towards those highs that were reached at the beginning of last week, then treasuries would be ignoring what the Fed's saying and looking much more at what oil is telling them.
Guthrie Reynolds, who leads our Markets Live Asia coverage there as we look ahead to that Fed decision. In the meantime, we've got some corporate headlines potentially moving a couple of the stocks trading in Sydney. We do have BHP naming Brendan Craig as its new Chief Executive Officer to lead the company's growth in copper and potash. He's replacing, of course, the outgoing CEO, Mike Henry, who had been in that position since the beginning of 2020. He takes that role takes effect from July 1st for Craig there. They are targeting that expansion across potash fertilizers, copper, also trying to manage that slowdown in iron ore, contending with rising costs. And of course, we've seen a lot of headlines, mostly for the smaller miners, but the energy crunch here in Australia is starting to take some effect as well. We're also watching Woodside Energy. This, of course, has been one of the stocks that really benefited from the energy price surge and the oil energy security concerns as well. This is Australia's biggest gas producer. They've also appointed a new CEO, Liz Westcott, to replace Meg O'Neill, who went over to BP, of course, last year.
And Haidi, coming up on the Asia train as well, analysis on Trump's Iran war strategy as he blasts allies for not getting on board. Plus, Invesco explains why they see improving global growth favoring cyclical assets. We have much more ahead. This is Bloomberg. Japan says the U.S. has not made a specific demand to send ships to the Middle East. This follows media reports that Tokyo has started to explore the possibility ahead of Prime Minister Takaichi's summit this week with President Trump. Let's bring in Bloomberg Politics editor Laura Davidson. That summit will be tough for Prime Minister Takaichi.
Yes, she's going into a situation where we've seen Trump get angrier and angrier over this week as allies have really rebuffed his calls to come help the U.S. He's, made several sort of demands and then reversed them, calling for countries to send ships to help secure the Strait of Hormuz. Almost nobody took him up on that offer. And then, a couple days later comes out and says, never mind, I don't need your help anyway. This is it kind of really put him in a spot where he, kind of feels very isolated in this moment.
And this is very tough for Takaichi, who comes from a country with a pacifist constitution, right? What are the implications for Japan? And is there any other thing that Japan could do to help appease President Trump at this point?
The other big thing that's on the table is purchase of U.S. oil. This goes into sort of Trump's broader, desire here to have U.S. commodities, U.S. agriculture goods be purchased by other countries. So this is kind of another way that she could sort of extend an olive branch. And of course, that speaks to this current moment here where, oil prices are incredibly high and there's a lot of kind of, sort of day by day almost consternation figuring out, okay, where is this next batch of oil going to come from?
Yeah, Laura, and we continue to see pump prices rising as well, right? We talk about this almost every day, but I do wonder, even if voters don't care about foreign policy, typically, are they starting to care about how it's feeding through to what their summer plans look like, what the cost of living situation is?
Yeah, this is really the week that a lot of schools in the U.S. start going on spring break. So you start to see travel. And then, of course, ahead of the summer travel season. So this is something where people are looking at gasoline pricing. Airlines are talking about these fuel surcharges. So they'll start to see that show up in higher airfares. Gasoline prices in the U.S. are about $3.79 a gallon across the country on average. That's a significantly higher. For years they've been, in some cases as low, in the $2 range or the low $3. So this is a significant increase. This is one of the things that voters see every single day. It's on big signs as they're driving around, even more so than, there's been lots of worries about the price of meat or the price of eggs. Gas is one of those things that's just at the top of everybody's worry list, and they can point to when they are citing their concerns about the economy.
This significantly weakens President Trump's position as he heads into also that summit with President Xi Jinping, which was already delayed.
Yes, this is sort of an acknowledgement here of just how much the war in Iran has really sort of undercut and scrambled Trump's both foreign policy and domestic policy. He had been talking about the summit almost for a year that he was going to do in April. Now he said it's going to be 5 or 6 weeks from now. They have not yet set a date. So that would put it somewhere potentially in early May. But, the Chinese side was actually quite happy to delay this. Trump sort of went out and said, OK, we're going to delay this. But the Chinese side, one, doesn't particularly want to meet with Trump while this war is ongoing, because that sends sort of a broader signal globally, but also they were worried that there wasn't enough time to get some of these deals done. Trump wants to keep this very focused on economic deals, but the China side also wants to focus on more diplomatic issues, things like Taiwan and other kind of broader concerns.
Bloomberg Politics editor Laura Davidson there. Let's take a look at some of the top global headlines that we're following. The EU will restart ratification of its US trade deal with a parliamentary vote on Thursday ahead of final approval by member states. The bloc has repeatedly stalled ratification, citing US threats to seize Greenland and uncertainty after the Supreme Court ruling on tariffs. The progress comes despite the US opening fresh investigations into EU trade that could produce additional tariffs. A senior US defense official has told Bloomberg that the Pentagon is working to develop alternatives to Anthropic's AI tools. It follows the Trump administration's decision to declare the company a supply chain risk in a feud over safeguards governing military use of the technology. The Pentagon's chief digital and AI officer says it would take more than a month to start transitioning away from Anthropic. More ahead on the Asia trade, this is Bloomberg. Well, BHP has named Brendan Craig as its next CEO, taking over from July 1st from Mike Henry. Meanwhile, Woodside Energy has confirmed Liz Westcott as its new chief. Our Bloomberg Metals and Mining reporter Paul-Alain joins us now from Melbourne with more. Lots of changes at the top. Let's start off with BHP and why this particular CEO to come has been chosen.
Yeah, so Brendan Craig is a 25-year veteran of BHP. He's been there Most recently, he's been the head of the Americas business, which has really been the growth engine for BHP. So we're talking about its massive copper business, where it's been expanding production, as well as potash, which is a new commodity that the company wants to enter. But Brendan, like I said, has been a veteran of BHP. He's been around for a very long time, and he used to run the other really core business for BHP, which is iron ore, of course. So under his management, when he was looking after the iron ore portfolio in Western Australia, we really saw a bit of a step change. There was a lot of operational excellence that BHP managed to achieve in that period of time while he was there. So those are two things that really stood him in good stead. I mean, last 6 months we saw copper become or rival BHP rival iron ore in terms of BHP's earnings. So we can really see that the board had confidence in appointing him to take over from Mike Henry, who's really steered the company into a new leg of growth.
So, Paul, Craig at BHP, but also Liz Westcott at Woodside. What are these two CEOs inheriting at this point?
That's a really good question because, when CEOs often take the reins, they inherit a company that, might have challenges or problems. But in both of these cases, both of the companies that they inherit are really well set up. They've got a lot of optionality, a lot of growth, organic growth opportunities. So for BHP, it's expanding into copper. It's got this massive project called Vicuna. It's about to enter production at its new potash mine, and it's expanding in iron ore. And the company has been performing incredibly well, on a share price level. It's churning a really decent profit. And I think the same could be said for Woodside. It has a lot of optionality. They're bringing on the Scarborough LNG project in Australia fairly shortly. They've also got a massive LNG project in Louisiana in the US. So Liz Westcott is inheriting another company that has growth and that has a future.
Paul, do we know how much, if at all, the energy shortage or concerns are starting to perhaps affect some of these miners in Australia?
At this stage, there hasn't been too much to show. I mean, BHP hasn't made any announcements, and from what I hear, it's performing okay. It's the smaller miners that we generally worry about in Australia, your small gold miners, that sort of stuff, because they only carry, say, a couple of weeks, maybe even just a week's worth of diesel. And of course, diesel keeps these mines running. So it's a good question, but at this point we're not seeing anything too dire. Yesterday we did hear that a mining contractor had to pull a lot of staff off one particular gold mine, but that gold mine is still running, but it might have a reduced rate. So we're not really seeing the fuel shortage hit the mining sector just yet, but that doesn't mean that it's not going to happen soon. We have heard of small service stations, petrol stations out in the outback running out of fuel. I think that's going to be something that we really have to watch over the coming week.
Our Bloomberg Metals and mining reporter Paul-Alain Hunt there in Melbourne. More ahead on the Asia trade. This is Bloomberg.
We are not a party to the conflict, so France will never participate in operations to free or reopen the Strait of Hormuz in the current context. However, once the situation gets calmer, and intentionally, this term is broad enough, meaning once the core of the bombing has ceased, then we are ready with other nations to take on other responsibilities, such as an escort system.
French President Emmanuel Macron there. Well, Donald Trump has stepped up his criticism of NATO allies as well as Japan, Australia and South Korea for ruling out joining military operations against Iran. Our next guest sees the war with Iran as entering its final chapter. Fred Fleitz is the Vice Chair of American Security at the America First Policy Institute. He was also previously Chief of Staff at the National Security Council during the first Trump administration. Fred, great to have you with us. And How's the war going? Because you say that this is entering the final chapter. Do we really know that? Because so far the strategic goals, overarching as they may be, have been still quite undetermined.
Well, the goals are to stop Iran from getting a nuclear weapon and destroying Iran's missile program. And those goals have been achieved. A related goal is not regime change, but weakening the regime so the Iranian people can take back their country. And I think the mark of a good leader is to recognize that when you've achieved your goals, it's time to declare victory and take the win. I think President Trump will do that within about 2 weeks.
President Trump has talked about regime change, right? He's also not ruled out putting boots on the ground. He's talked about a set of potentially strategic goals that may not be achieved without ground troops. You talk about giving the Iranian people an opportunity to come in and seize that leadership. Is there any evidence that we have to see that the opposition, the groundswell, is strong enough and organised enough to do that?
The president has been clear that his main objective is stopping Iran from getting a nuclear weapon. I think their nuclear program has been set back decades. The power projection capabilities of this regime have been destroyed. The world is much safer today because of Donald Trump and what Benjamin Netanyahu did. I don't want U.S. troops on the ground in Iran. I don't think that's going to happen. The main remaining task is to neutralize drones and missiles that are being fired to the Strait of Hormuz. I wish our Asian and European allies were with us on that, but I believe the U.S. Navy and the U.S. Air Force can take out these positions that are threatening the Strait.
Do you believe there was an imminent nuclear threat? Because the United Nations doesn't think so. Joe Kent, who just resigned, doesn't think so either. His accusation is that Israel misled President Trump and the United States into starting this war.
What a shameful thing to say, to engage in anti-Semitism and Israel hatred because you happen to have policy differences. Let's be clear here. Marco Rubio said, and I believe this is exactly right, that Iran was assembling what would be a missile shield that would have been impenetrable. By the end of 2026, it would have used this shield to protect its nuclear weapons program, which it resumed after the 12-day war. That made this an imminent threat. Rubio spelled that out very clearly. Kent knows this. Why he resigned, I don't know, but frankly, his reasons made no sense.
So how close are we to ending this war then?
I think we're looking at a couple of weeks, maybe 3 weeks. President Trump has called it an excursion. He's very particular that this not be a quagmire, that this not be an unending war. I think after most troops and ships are sent to the region or withdrawn that were sent for this conflict, there will be a residual naval force in the Arabian Sea to keep an eye on things, maybe to attack again if Iran escalates. But this regime is broken, and there are signs just in the last 12 hours of Iranians demonstrating, well, they're actually celebrating an Iranian holiday in defiance of the security forces. They're yelling death to the dictator. They're hoping that the son Shah will become the leader, the Shah's son will become the leader. I don't know if that will happen, but there is evidence right now that the Iranian people are going to challenge this regime.
Given how justified this war seems to be, according to your views, why do you think allies are not chiming in here?
Well, I think it's a shame that we have, and first of all, I might add that we're very grateful for the support of the Australian and Canadian prime ministers for this effort. I wish that our allies in NATO were with us. I think we have a number of liberal leaders who simply aren't standing by their principles. It sounds like President Macron is prepared to join the U.S. in this operation in some way after we win. Well, I guess that will be welcome, but it's a shame that the French and the British and the Germans were not with us at the beginning.
Do you think there would have been more willingness to participate from allies if they were consulted on these operations to begin with?
I believe they were consulted on these operations. What I think they're upset about is that there wasn't a UN Security Council resolution approving it. They're claiming that it was not consistent with international law. There was no way to get a Security Council resolution because of vetoes by the Russians and the Chinese. And I think that this is an unfortunate but necessary action against a state that's been at war with the United States for 47 years and has operated outside of international law. It's a state sponsor of terror, and President Trump decided to take it down.
I guess the issue right now is weighing the benefits against the cons of this war, right? Especially when it comes to bringing global order and also when it comes to other of President Trump's top priorities. I mean, this war in itself, as President Trump says, has delayed the China summit that he was planning with President Xi Jinping. Will it endanger his other priorities that might be more important for the American public at this point?
I don't think so. That's why I believe the president is going to wind this war down in a few weeks. He's still determined to pursue a productive relationship with President Xi. And look, it was Trump who wanted to postpone the summit. And frankly, it was a good move because Trump really needs to remain in Washington until all the details of this operation are done. Then he can put his full attention on a successful summit with the Chinese leader.
How happy are the American public right now, especially as we head to the midterm elections?
You know, the conservative movement is surprisingly supportive of this. You're not hearing that in the national media. I think there's considerable opposition by Democrats and there's strong opposition by independents. That's because the news media has been just so incredibly, overwhelmingly negative. I think the Trump administration has to do a better job selling what was accomplished, explaining that this mission is concluded successfully, and we'll then move on to the midterm election.
Yeah, we'll find out in November, won't we? Fred Fleitz, good to have you with us, Vice Chair of American Security at the America First Policy Institute. He's also the former Chief of Staff at the U.S. National Security Council. Take a look at how oil prices are trading at the moment. We have, of course, seen significant upside for Brent trading above that $100 level for a fourth consecutive day. When it comes to WTI, we're very close to that $100 level as well. $96 is your level right now, as we have seen concerns over everything, stagflation, recession risk rise around the world. It's also time for morning calls ahead of the Asia trading day. Wall Street analysts expressing skepticism about that energy's massive outperformance this year will actually continue. Citi's model has shifted U.S. energy to a short position, projecting the sector will decline over the next month. Jefferies notes massive inflows into U.S. funds, with a 12-week total now at 7% of assets, levels they call toppish.
Barclays has joined the chorus of market experts calling for a rebound in stocks after Goldman, Morgan Stanley and JP Morgan pointed to support from earnings and valuations that are becoming less stretched. Barclays pointing to an internal metric they follow, the equity timing indicator, which has dropped to its lowest level since President Trump's tariff turmoil last April. They also say relatively muted positioning among systematic and discretionary investors could amplify any upside move. Well, let's take a look at how we're tracking so far in Asia. This, of course, as we head towards that Fed decision. The question is whether the central bankers are going to be able to reclaim narrative over what's kind of controlling moves over the Treasury market at the moment, given it has really been trading almost in lockstep with what we see in oil prices. This is a picture as we have a bit of downside, pretty flat there in the day after the RBA decision to tighten further. Aussie stocks not moving much in either direction. Chicago indicator futures also looking just mildly positive at this point. S&P futures showing downside of about 0.1%. We did see those muted gains, if you will, overnight, seeing that investors are still trying to look for reasons to see through the near-term geopolitical uncertainty for some of those opportunities. We had modest gains for the S&P 500, also about 0.5% higher for the Nasdaq 100 as well on Tuesday, a second straight day of advances. There is some cautious optimism, despite, of course, we see continued moves for oil, a return to some of that haven demand for the dollar as well. More ahead on the Asia trade. This is Bloomberg.
President Trump's intention is that United States should have a leadership position in access to Nvidia's best technology. However, he would like us to compete worldwide and not concede those markets unnecessarily.
Nvidia is firing up production of H200 AI accelerators for China. CEO Jensen Huang saying that the company has secured licenses for many customers and is restarting manufacturing for a market once blocked by U.S. export restrictions. Let's bring in Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. And Mandeep, Nvidia's China used to make up, about a quarter of Nvidia's revenue in the past. So how fast could this uptake be and how big of a difference could it make?
Well, now everything is being talked about in the context of that $1 trillion forecast that they have given through 2027. And from that perspective, I expect China ramp up to be a lot more gradual. I think they've talked about, Blackwell and Vera Rubin, which is their new architecture really driving that $1 trillion forecast. I don't think there is an assumption around what the contribution of China revenue could be from the Hopper 200. But look, there is no doubt that this company has got multiple things going on for them in terms of tapping different markets, whether it's on the sovereign side or, adding more components to their GPUs and driving up ASPs. And from that perspective, I think the revenue visibility does look quite good, at least through 2027.
How restrictive are some of the rules and regulations around being able to tap that China market? And are they likely to become more problematic?
Yeah, so in the past, Jensen Huang has talked about China being a $50 billion addressable market. And obviously, we have Huawei chips that, companies are using over there already. So from that perspective, it'll be interesting to see what the uptake will be for the Hopper 200, given NVIDIA will be selling their Vera Rubin architecture, which is two architectures, ahead of what they will be selling in China. And look, I think I expect, at least, $4 to $5 billion of sales in the first year, but I'll be very surprised if they see a big uptake given how far along they are in terms of selling their chips in other markets.
Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh there in New York. Well, Tencent is expected to record its fifth straight quarter of double-digit revenue growth when it reports on Wednesday, thanks to its core gaming and advertising businesses. But investors will also be focused on its ambitions in agentic AI. Let's bring our China correspondent, Min Lo, who joins us out of Hong Kong. So let's start with those AI ambitions and how will investors, given the recent AI scare trade and questions over the sustainability of investment, how would they be assessing the growth potential now?
So if you look at Tencent's stock performance over the last year, it's been lagging behind Alibaba, and generally Tencent is seen as slower than Alibaba in rolling out new AI products in terms of user growth as well. And this is particularly stark if you look at the ChatGPT-like app that Tencent has. It's called Yuanbao. You compare that with Alibaba's Qwen and ByteDance's Doubao, and you can see that Yuanbao actually is the smallest by far in terms of user base. But everything started to change in March. You look at the stock performance there in March, it started to catch up with Alibaba. And the turning point there was OpenClaw. It burst into the scene, and Tencent was one of those that rolled out an integration of OpenClaw into its app. It's called QClaw. And now there is a lot of hopes, investors betting on Tencent as one of the lead players that can capitalize on that because of the deep and broad ecosystem it has. With the WeChat app, it's a super app with many different mini apps on it. That means it provides a treasure trove of data for Tencent, and that will potentially allow it to capitalize on that. And we know Tencent's ambition is to roll out its own AI agent, sources say as soon as next month potentially, and they will want to integrate that into a one-stop sort of AI assistant within WeChat.
Capitalizing on the product also means that the payout needs to offset a lot of the costs, but we know that AI development is very expensive. So how are we expecting that to drag on margins?
So to your point earlier, I think Tencent in particular, its core revenue is still very strong. We're expecting double-digit growth from its core revenue from advertising and games, and this sets it apart from companies like Baidu, whose core revenue from advertising has really not been able to catch up with the new players like Xiaohongshu and ByteDance. So that helps to cushion some of the cost that they are putting into AI. We want to look out for any management guidance in terms of CapEx spending, whether they will raise that, because so far Tencent has been quite prudent, not really matching the sort of ginormous AI spending that we had seen from Alibaba, for example. And when it comes to the push into AI agents, analysts have been saying that this is going to be a major drag, yes, on margins because of the sheer amount of computational power that is needed versus the API cost, that's the app programming interface, which over the last few years had seen a major price war as low as close to zero prices for the API. So that means that these big tech companies are essentially subsidizing people to use their services, and the hope is that they will retain users within their ecosystem and then get money off the other functions like the games, the advertising, and the payment.
Bloomberg's China correspondent Mimi Liu there with the latest on what to expect from Tencent. We also have Baba earnings out on Thursday as well. Do watch out for that enterprise-facing business when it comes to artificial intelligence, also cloud computing. So it's a big week for tech companies, especially at a time when we have heard from the Nvidia CEO about really that confidence on AI revenue topping $1 trillion. And you can see the upside in pre-market trading of all of those South Korean chip-related names, Haidi.
Well, Shery, IBM CEO Arvind Krishna says the company is eyeing more AI deals as it sees lighter regulatory pushback. He shared the details of IBM's M&A strategy following the company's $11 billion acquisition of the data streaming platform Confluent.
I think the regulatory environment is definitely friendlier, where we got this done in just under 4 months, whereas it used to take a lot longer a few years back.
If regulatory environment is friendlier, should you be doing more of it? Should there be more M&A, particularly with some beaten up overall valuations of software companies at the moment?
I'll just say watch the space.
Oh, watch the space. Okay, but where would you want to add on in this moment? I mean, what would make sense to be adding to your portfolio?
So we're very focused. Hybrid cloud and AI and the intersection. The work we're doing together with Nvidia was a 5 times speed up. So 5 times, not 5%, not a little amount, but 5 times. So there we began to leverage the Nvidia GPUs together with some of their CUDF or software, combining it with our Watson-X data. And the example we used was our client Nestle, where together we managed to get that speed up across their massive amounts of data, and that really is important. In that case, combining some of the technologies we work on also in open source with the Presto data engine, Nvidia, and the example at Nestle, but then we're very excited. We're going to do more work on that and then take it into the market and take it out to hundreds of clients from there.
IBM CEO Arvind Krishna speaking with Bloomberg's Caroline Hyde. You can get more on the biggest stories in tech on the Bloomberg Video Hub. You can also check out past episodes of Bloomberg Tech Asia and other shows on Bloomberg.com/videos. Right now, we do have breaking news out of Japan. We are getting the latest on the trade balance, and we are seeing a surplus of 57.3 billion yen coming from a deficit and also beating economists' expectations that were waiting for a deficit of more than 400 billion yen for the month of February. This perhaps helped by the export numbers, year-on-year growth of 4.2%, which is beating economists' expectations, although a deceleration from the previous month. Imports also rising year-on-year more than 10%. We have seen those exports to China in contraction, to the U.S. contraction of 8%. But when it comes to those exports to the European Union, is a rise of 14% year-on-year. So the trade balance coming in the black, more than 57 billion yen. We have more ahead on the Asia trade. This is Bloomberg.
The latest on the corporate front, and Unilever is considering a separation of most or all of its food assets as it looks for ways to streamline its portfolio. Bloomberg's learned that a transaction would likely value the company's food business at tens of billions of dollars. Sources say the company has not made any final decisions. Boeing has signalled that several performance issues will weigh on its first quarter results. The plane maker says it's delivered fewer wide-body aircraft than planned and cited wiring defects on the 737 MAX as another headwind. It's also pushing back by a year its goal of generating positive margins at the key commercial plane unit.
You don't get access to all the information until you actually close, and so there was cost. Their cost was higher than the price that they were getting from us, and so we had to reset the margins at BCA as a result. But again, that's a short-term headwind. I think that we'll be able to work through that. When you think about longer-term cash flows, that really won't get in the way of us being able to generate the types of cash flows we've talked about.
Take a look at what we're watching when it comes to crude prices, and we are seeing oil prices holding most of those gains. Iran confirming the death of its security chief in a further intensification scene for the Middle East war. We continue to see that roiling global energy markets, despite, of course, some signs that a small handful of ships are being allowed through. But at the moment, we still see the focus remain firmly on that choke point of the Strait of Hormuz, effectively still closed there. Traffic conditions shaped by what looks like a political calculus, and Iran likely allowing just a few vessels based on their national affiliations. But that's a picture when it comes to New York traded crude at the moment. We added almost 3% on Tuesday. Brent had settled above $103 as this war continues to play out. There's no really element as to when we might see an off-ramp or a winding down of the war. We've heard President Trump talking about seeking to restart trade flows through the Strait of Hormuz, but it does not seem like that's making too much progress, Shery.
And it's that uncertainty, Haidi, that has kept those gains in the stock markets in check, right? Because on the Wall Street session overnight, we had some modest gains, but it was really the oil volatility that people were very much focused on. So we did see Barclays, for example, saying that U.S. stocks are flashing their strongest buy signal in almost a year, but the gains were pretty modest, at least for now. And you can see U.S. futures not doing much at the moment. We are seeing some upside on Nikkei futures, though. We are, of course, expecting the Bank of Japan policy decision on Thursday. The expectation is for a hold, as we're also looking forward to that Takaichi-Trump summit. The ASX 200 not doing much after the RBA carried out a back-to-back rate hike. The market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after some positive upside on the Wall Street session, but little gains, Haidi, capped by the uncertainty over the war in Iran. And of course, we're following, though, the positive sentiment coming again from Nvidia about those AI investments and demand still being out there.
There are still some patches of positive sentiment, as you say, just not a whole lot of conviction, right? Particularly as we head into that Fed decision. The question is really whether we're going to see central bankers kind of reclaim that narrative over what happens with bond markets, given the dominance of the energy story.
Yeah, especially concerns around recession risk potentially if oil prices remain elevated, right? It's the same thing here in Japan, where we're headed towards a Bank of Japan policy decision on Thursday. The expectation for a hold, but given the weaker yen and also higher oil prices, there are really growing concerns about a potential stagflation environment here in Japan. We, of course, are watching also for Prime Minister Takaichi to meet with President Trump. We're hearing from authorities here that they haven't necessarily requested Japanese ships to help out in the Strait of Hormuz. Nothing specific, but we'll be watching for any wording around that. As we're seeing the Nikkei now gaining early in the session with a little bit of strength for the Japanese yen, but very close to that 159 level, especially given those comments coming from Finance Minister Katayama throughout the week, warning that authorities were ready to act if we see more volatile moves in FX markets. Take a look at JGBs as well, because we had a solid 20-year auction. We had also trade data out of Japan just minutes ago showing that we actually swung into a surplus from a trade deficit with exports beating economists' expectations, although decelerating a little bit from the previous month. Take a look at how Korea is also opening, because as we mentioned, is all about chips, is all about Nvidia, and really the semiconductor space, spending. So anything related to AI is where you have to keep your eyes on. And you can see that Kospi now rallying more than 2% at the moment. Do watch out for any commentary around oil prices, of course, also out of the Korean markets. We're seeing a little bit of strength for the Korean won, but this after we got very close to that 1,500 level. We saw the labor market tightening a little bit in the month of February, with that unemployment rate coming in at 2.9%, so beating economists' expectations. But Heidi, really the concern among central banks is really what's happening with oil prices and what that will mean for their very oil-dependent economies like Korea, like Japan, more than 90% coming from Middle East.
Yeah, and it's interesting. Monetary policy has almost been playing a backseat role to what's going on with geopolitics. And as you say, the impact on energy markets, right? It's really upended these inflation expectations. We do expect that traders are kind of starting to dial back those bets against Fed cuts now, given what we see with that inflation environment. And as Shery mentioned, those recession risks and stagflation risks as well. Let's bring our next guest, who says that investment opportunities are seen greater outside of the US, and a weakening dollar could benefit commodities and emerging markets. Which is with us now is David Chao, who's a global marketing strategist at Invesco. David, great to have you with us. And these are somewhat contrarian views, because what you have seen, of course, is that haven demand for the dollar, perhaps still further to go with that, and a lot of concerns, particularly when it comes to Asia-Pacific economies, on an outsized negative impact from an energy crunch. How do you counter that?
That's right. Well, I'd say that our outlook from the start of the year was working quite well in terms of non-U.S. assets outperforming, dollar weakening due to Fed rate cuts, and overall a risk-on move for equities over fixed income. The recent developments in the Middle East certainly upends that outlook, although I'd argue that that's only just for a temporary blip. We've looked and we've studied the past 6 supply-side shock to oil impacts on the markets, and on average it takes around 4 to 5 months for oil to return back to kind of the pre-supply-side shock level, and also for the S&P and for stock markets levels to return around that 5-month level time. So I still think that sticking with our outlook that we prefer in the U.S. cyclical small cap stocks, but at the same time we also prefer things like emerging market equities. Will pan out later on in this year.
Yeah, what are those opportunities in EMs? Do they include China? Because, out of the various global economies, China seems to be better insulated to these geopolitical and oil shocks.
That's right. We all know that Asia is the region that's impacted the most by any kind of disruption flow of energy from the Middle East. China is not as impacted due to their high surplus of inventories of oil. But at the same time, China's economy is quite diversified. There's a focus on things like high-tech manufacturing, on AI, but also on the consumption demand that's starting to pick up steam. We recently saw the monthly economic data points that show that China's economy has had a very strong start to the year.
Yeah, we still have to wait for that fundamental economic data to come out of China, right? But as you mentioned, the tech sector seems to be booming, especially the expectations about what that could mean. At the same time, spending around AI seems to be ramping up. We do have earnings from Tencent, from Alibaba. Is that a short-term constraint for some payoff to come out of all of these investments?
Well, I'd say that Asian AI, China, Taiwan, Korea, Japanese AI, that these stocks still have another leg up due to the valuation discounts relative to U.S. AI-related companies. So I think that there is still a longer runway for the AI story in Asia, and I expect earnings to be strong over the coming quarters for Asian AI-related companies.
In the meantime, we are expecting central bank decisions, of course, and the Bank of Japan, the big one here in Asia. Not any change expected when it comes to the rate, but what will you be watching for the future direction of the markets, especially at a time when the yen seems to be pretty volatile too?
Well, I think overall, central banks around the world, we have a slew of central banks meeting this week. We'll be watching very closely any kind of inflationary impulse that the developments in the Middle East will have on headline inflation. And I think that for any central bank that was looking to ease, for example, like, Indonesia, Thailand, India, that they could be on hold for a while. And any of the central banks that were looking to tighten, for example, like Australia, which hiked rates earlier this week, that this development in the Middle East could expedite that tightening path.
And if it does really expedite the tightening path, it could also mean more pressure for some currencies, right? I mentioned the Japanese yen. Is that a risk for this economy and just for broader stock market trading at the same time when the yen becomes really a bigger risk instead of more upside just for exporters?
Well, I would argue that the risk is not necessarily with the currency strengthening. And in fact, that would be a welcome development, especially for consumers, because when they purchase goods, especially imported goods, they're quite expensive. So a stronger yen is likely to actually boost domestic consumption, which is the next leg up, I think, for the Japanese economy.
Wouldn't the yen become weaker if you have that hawkish bias and tightening bias from other regional banks? Like, my question was more like, what happens if the yen weakens further?
Right. Well, I think that we're in an environment of desynchronized bank policies. So there are certain central banks in Asia that are easing policies. For example, China, India is likely to continue to ease. Indonesia, where other central banks in the region are tightening. For example, Australia, Japan, and because of this kind of divergent path, it's likely to have a more complicated impact on currencies. But I wouldn't say what's developed in the Middle East is likely to make all central banks in the APAC region become more hawkish.
You talk about selective hedging, managing risks. What does that look like? What are you thinking about cash at the moment? You're getting kind of a louder chorus of advisors saying that you should maintain some cash piles. Are you looking at that, or do you think being fully invested is a better option still?
I think maintaining a bit of cash, especially while interest rates are elevated. I think the shorter end of the curve looks more interesting now. The 2 years, given some of the developments that are going on. I think the longer end of the curve, government bonds, 10-year government bond yields are likely to still trudge upwards. And that's due to things like, a significant fiscal stimulus spending in places like Japan, the US, and Europe. But overall, I think having a healthy cash balance makes sense, especially to take advantage if there's going to be any kind of dislocation that could occur due to the war that's going on in the Middle East.
What do you see as being the recession risk? Because it's a pretty difficult balancing act for central banks at the moment.
I think the recession risk is quite low. I think if you look at the direction of economies heading into this war, was one of strength. The U.S. economy has been strengthening over the past few months. Growth expectations have been exceeded. Inflation estimates have been coming down. Overall global growth is rebounding and is expected to improve this year relative to last year. So that is the most important development, I would say, heading into this kind of supply side oil shock. So I'm not concerned of recession. recession. I think that this is going to prove to be a momentary blip in the oil market. It could take a few more months for oil prices to come back down. And we know that stock markets tend to return. The S&P has returned around 15% on average after 12 months of a major geopolitical development.
David Chao, global market strategist at Invesco, there with us. Let's take a look at some of the energy names, which of course have been some of the rare beneficiaries, if you will, of this continued geopolitical turmoil. The usual suspects, Santos here in Australia, Impex, S Oil Corporation, all seeing upside of as much as 2.2% there. This follows as we see the oil names and oil futures rallying in the overnight session as well. We are seeing, when it comes to some of the corporate headlines driving gains across the board, BHP and Woodside Energy are two that have announced leadership changes so far today. Australia's biggest gas producer in Woodside confirming Liz Westcott as the new CEO, replacing, of course, Meg O'Neill, who went over to BP last year. Meg O'Neill, of course, was a big advocate for two major ventures, including the offshore reserves in WA and an expansion of the export terminal in Louisiana as well, which is still under construction. Woodside Energy, modest gains for BHP Group as well, announcing that Brandon Craig has been appointed CEO following Mike Henry, and really focusing on the potash as well as the copper part of the business as iron ore continues to slow. More ahead on the Asia trade, this is Bloomberg.
Today, the Fed decides.
Here we go again. Jay Powell only has two more of these meetings on the calendar.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
The potential risk scenario for the Federal Reserve is simply that they remain on hold for longer.
Certainly the Fed is no longer cutting.
Prices are going to go up. You might begin to see even more upside pressure on inflation from an already pretty bad starting point.
Is this too highbrow today?
Tune in to Bloomberg Surveillance. The Fed decides.
President Trump has lashed out at allies who've rejected his appeals for military assistance in the war with Iran. He singled out Japan, Australia, and South Korea in a post on Truth Social, even while saying the U.S. doesn't necessarily need anyone's help. Trump also stepping up his criticism of NATO.
So I think NATO's making a very foolish mistake. And I've long said that, I wonder whether or not NATO would ever be there for us. So this was a great test, because we don't need them, but they should have been there. The other thing is, and I think, very important, we didn't have to be there for Ukraine.
Let's bring in Bloomberg Politics editor Laura Davison. Laura, seems President Trump continuing to bash NATO allies, just allies in general, at a time, of course, when we have seen his trade policies also cause more friction.
Yes, so this is, in some ways fits into Trump's worldview of, look, we're at war. Shouldn't our NATO and our other allies be backing us up here? Of course, if you were to talk to those other allies, they would say, look, this is a war that you did not consult us at all, came as a surprise. We don't see the justification. We don't see the end game. We don't see the objectives. Why would we get our troops and our military assets involved? So it's sort of, you have kind of both sides approaching this, not really seeing the same set of facts, essentially, on what those alliances should look like. One interesting tidbit is that Zelensky is one of the few foreign leaders who has pledged a modicum of support for this war. He has, offered some narrow amount of drones and other technologies, acknowledging that he himself is still very reliant on, the U.S. and other European allies in this, trying to essentially throw Trump a bone here. But none of the big allies have come and taken Trump up on this offer as well. Of course, tensions are strained not just because of Iran, also going back to trade and tariffs. Trump faced a blow just 2 weeks before the Iranian war, with the Supreme Court striking his tariffs down. Since then, he's launched several investigations into essentially all the major economies of the world to basically act as a precursor to more tariffs to come.
I mean, as we continue to follow the developments in the Iran war, you tend to forget that the Ukraine war has been going on now for 4 years, and we're still not seeing an end to that. And we know that Russia, for example, is getting a reprieve when it comes to their oil shipments. So I do wonder what the end goal, as we've been talking about, is for President Trump, where he can claim victory, that something has been achieved. In the meantime, we continue to see the violence escalate, and Iran's security chief has been taken out at this point.
Yeah, Trump, he in terms of sort of coming to some peaceful solution to this war where the violence completely stops, seems highly unlikely, particularly in this moment, at least for the next foreseeable future, because even if the U.S. were to say, okay, we're done here, it's unlikely that Iran would just also decide to lay down their weapons. Trump has started something that he now doesn't have full control over and can't necessarily stop here. When it comes to Russia, when Russia invaded Ukraine, they went in with a similar attitude as Trump of this will be a short, easy, swift operation. We have outpowered them militarily. 4 years later, there is still no end in sight. In Trump's game here, or in Putin's game rather, he's happy to wait it out. Time is on his side. This is, in some ways, Iran is a boon to him, both because he's getting sanctions lifting, but also just because the world attention is elsewhere. He's sort of hoping that, time, energy, military dollars are sent other places. For Trump, at some point, the U.S. is not going to want to be involved in this. But if Iran, it's their country, they're going to continue to fight as long as they need to.
Laura, the killing of the security chief that Shery mentioned will be seen as a victory for Israel and Iran, and the US, I should say. But for Iran, it sort of removes one of the individuals that we're seeing in a relative basis, perhaps more of a pragmatist and perhaps more of a moderate in that space, right? Does that now risk the chance of the leadership becoming more hardline? Who does Trump even negotiate with to try and get to an off-ramp?
Yes, this is really an issue that, Trump kind of initially in the early days of this war was talking about how he had people in mind who he wanted to pick as leaders. It became very clear that he was not going to be able to choose this leader. And so now he's working with different scenarios here, kind of musing aloud about who he might want to be, saying, oh, the people who we liked are now all dead. And this is really the risk here that you have more, one, there's just fewer people at the top to choose from. You perhaps have less qualified people, more hardline people. People will be less appealing to the U.S. who are now in the ranks to succeed to some of these high jobs. Plus, you have, an Iranian population who might have, who a couple months ago was not happy with their leadership, but now that they've been bombed by the Americans and the Israelis for several weeks and, for the unforeseeable future, they, are going to be more kind of this rally around the flag effect, more willing to take a leadership that they may not have been open to otherwise.
Well, the opposition in the U.S. is growing. The top counter-terrorist official actually quitting. But that's one issue. The other one, when it comes to U.S. allies, who wants to be in Prime Minister Takaichi's shoes right now, going into this summit with President Trump, with this war raging and potentially really diluting a lot of other issues that are more primary for these two countries?
Yeah, Takaichi really faces two big problems. One is that everything is Iran right now. That's what Trump is focused on. That's what the world stage is focused on. And that, her priorities going to this meeting when they planned it weeks ago are now going to be crowded out. Secondly, she's going in with a Trump who is quite irritable. He has not gotten his way. He, very angrily, kind of over the weekend said, we need these warships. And then just in the past day or so, kind of said, look, we don't need your help. I don't want your warships anyways. And so now he's going in. He's called out Japan specifically. He's called out her, saying, that we didn't need Japan's help. So she's going in with just both a tricky, geopolitical with a president that is not Trump situation. Layer on, the unpredictability of Trump and what kind of mood he might enter the Oval Office with.
That charm offensive will have to be huge, Heidi, in order to really try to win President over here, right?
It's extraordinary times, and I think it goes, Shery, to your point, with this distraction, this major distraction of another military operation. What does this take away from in terms of some of these key diplomatic relationships between the US and its partners around the world? Our Bloomberg politics editor there in Tokyo this week, Laura Davison. Meanwhile, President Trump has confirmed he will postpone that upcoming planned trip to China, but no future date has been set yet. For the latest, let's bring our chief North Asia correspondent, Steve Angle. And so, Steve, you were always a bit dubious about the original timeline of this, and it goes to the conversation about what's sort of being sacrificed diplomatically at the moment as the president focuses on the war. Do we have a new estimate on when it will actually happen? Does this potentially derail momentum?
Well, it definitely takes a little bit of the progress that they had over the weekend, at least according to Jamieson Greer and Scott Bessent, who met He Feng, of course, in Paris for that extra round of talks, and also sort of lay the groundwork potentially for that summit, which was going to start in 2 weeks. It has now been confirmed that it will be postponed. We don't know when the next date will be. I guess you have to extrapolate and say, how long is this quote-unquote excursion in Iran going to last for the White House? Because sources are essentially telling us that Beijing didn't want to have anything to do with hosting Donald Trump. I'm paraphrasing the sources because, again, they don't want to necessarily be seen as supporting the war in Tehran and the White House's actions in Tehran by basically having a state visit with the man who instigated the war along with Israel. So there were lots of landmines for China to host this, but Donald Trump essentially doing Beijing a huge favor by taking it upon himself to postpone the trip on the grounds that there are logistical challenges. And obviously, as we've been hearing from Laura there, his hands are quite full with the war in Iran. So again, it's probably a win-win situation. Donald Trump is saying it's going to be 5 or 6 weeks delayed. But again, I say, how long is this current action in Iran going to last? That's probably a better barometer of when Xi will truly welcome Donald Trump to Beijing for those planned summit.
Chief North Asia correspondent Stephen Engel there for us. More ahead on the Asia trade. This is Bloomberg. Take a look at the top global headlines we're following. The EU will restart ratification of its US trade deal with a parliamentary vote on Thursday ahead of final approval by member states. The bloc has repeatedly stalled ratification, citing US threats to seize Greenland and uncertainty after the Supreme Court ruling on tariffs. The progress comes despite the US opening fresh investigations into EU trade that could produce additional tariffs. A senior US defense official has told Bloomberg that the Pentagon is working to develop alternatives to Anthropic's AI tools. It follows the Trump administration's decision to declare the company a supply chain risk in a feud over safeguards governing military use of its technology. The Pentagon's chief digital and AI officer says it will take more than a month to start transitioning away from Anthropic. Shery.
Take a look at how some of these tech companies, Haidi, are trading in the Japanese session. We're seeing broad upside with SoftBank gaining more than 5%. A lot of those AI-related trades, right? Especially after we heard from Nvidia CEO Jensen Huang again about that positive sentiment around that AI revenue topping $1 trillion. Also, their manufacturing ramping up for those H200 AI accelerators that are destined to go to China. So you can see the likes of Kioxia, for example, that has also been helped by the memory chip shortage, gaining more than 5.7% at the moment. We're seeing some positive sentiment across markets, especially around the tech sector. The leadership has been there throughout the week, and a lot of it capped given the uncertainty over the Iran war, the oil volatility as well. But when it comes to the tech sector, we are also watching in China Tencent earnings today, then Alibaba earnings tomorrow as well, and that will give us more of an indication how these companies globally are investing in AI. More ahead on the Asia trade. This is Bloomberg.
We are seeing Asian equities holding on to some gains ahead of that Fed decision, where we are expected to see central bankers try and grapple policy making away from the power of what's been happening with energy prices and how they've really been the market drivers for the past few weeks. We take a look at the gains across the Nikkei 225, seeing upside of about 1.4% there. Also some gains across in Korea of greater magnitude. We are off our session highs, but as much as 2.9% higher for the Kospi earlier Australia, extending gains now for a third session. We do see investors really trying to look past the near-term geopolitical uncertainty with the Middle East war. Chip makers in the day session are the biggest boost so far. Samsung rising as much as close to 5% on the Korea exchange. We're seeing Hynix putting on almost 4% there as well. But really, it is a pretty broad-based rally that we're seeing in Korea. In Australia, a much flatter session the day after the RBA tightened again. Pretty steady trading there. Little change with energy shares again gaining. Banks, financials are some of the losers so far. BHP and Woodside both on the rise after both of those companies appointed new CEOs. Well, Nvidia is firing up production of its H200 AI accelerators for China. CEO Jensen Huang says the company has secured licenses for many customers and is restarting manufacturing for a market once blocked by US export restrictions. Our Bloomberg Tech co-anchor Ed Ludlow reports from the chipmakers' annual conference in San Jose.
The situation for Nvidia has changed in China literally in the last 3 weeks. It seems like now there are multiple licenses for customers in China, and Nvidia is taking steps to meet that demand. Here's what Jensen Huang had to say.
We've been licensed for many customers in China for H200. We have received purchase orders from many customers, and we're in the process of restarting our manufacturing.
The biggest piece of clarity came around that $1 trillion figure, a sales opportunity 2025 to 2027. It is just Blackwell and Rubin-based systems. It does not take into account any revenues or revenue opportunities from CPU or even Grok, although Jensen Huang did say that if you factored Grok into it, there could be up to 25% upside on that $1 trillion figure. Beyond that, it was very much a kind of state of the world. It always is at GTC, where Jensen Huang holds court with the press and goes through a wide range of issues. But probably the biggest thing beyond sort of talking about how robust demand is the solidity of supply chains. There's going to need to be trillions of dollars worth of capacity put in place to meet the supply that's required for current demand. Jensen Huang also addressed what's happening both in the Middle East and in Iran. Nvidia has lots of employees in Israel, and he said that the company is committed to Israel. He's very worried about his employees there. And as it relates to Taiwan and the future of Taiwan, Nvidia is 100% committed, and its supply chain has heavy concentration there. That is not going to change. Ed Ludlow for Bloomberg News in San Jose, California.
Let's bring in Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, for more on Nvidia and, of course, its efforts in China. And that H200 production, Mandeep, how big are we expecting to be the uptake, given that we have heard the likes of Beijing authorities not necessarily encouraging all of these companies to buy from Nvidia?
I mean, we've had a lot of start and stops when it comes to, the China sales of Nvidia chips. And so I'm not very optimistic in terms of, China sales meaningfully driving up estimate revisions for Nvidia. With that being said, what I'm most impressed by is the readiness of, Nvidia to be able to manage the supply chain for these kind of orders coming from China, because they didn't know when they will be getting the approvals. At the same time, they seem to be handling that supply chain really well in terms of ramping up capacity for any additional demand, given what we are hearing from all the other customers that they're so supply constrained. It just goes to show how well Nvidia has been managing their supply chain right now.
What do you make of the sales goal?
Well, the $1 trillion number is, I think, just a reflection of the hyperscale customers managing their supply chain when it comes to procuring the AI chips they need for, all the compute demand that they are seeing. So everyone over here is managing their supply chain, whether it's Nvidia or the hyperscale customers where Nvidia is one of their key suppliers. And so from that perspective, Nvidia having that $1 trillion in sales through 2027 is just a function of how paranoid, all the hyperscale cloud players are in terms of making sure they have supply of these chips that all their cloud customers want. And I think they're ready to commit to that kind of a sizable order. But I want to remind your viewers that hyperscale CapEx has always been lumpy. And so this time won't be different when it comes to, that lumpiness. And when we will have a digestion period, I think that's when it'll be hard for Nvidia to grow their EPS. But that phase wouldn't come before 2028 at this point.
Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh there in New York. Well, IBM CEO Arvind Krishna says the company is eyeing more AI deals as it sees lighter regulatory pushback. He shared details of IBM's M&A strategy following the company's $11 billion acquisition of data streaming platform Confluent.
I think the regulatory environment is definitely friendlier, where we got this done in just under 4 months, whereas it used to take a lot longer a few years back.
If regulatory environment is friendlier, should you be doing more of it? Should there be more M&A, particularly with some beaten up overall valuations of software companies at the moment?
I'll just say watch the space.
Oh, watch the space. Okay, but where would you want to add on in this moment? I mean, what would make sense to be adding to your portfolio?
So we're very focused. Hybrid cloud and AI and the intersection. The work we're doing together with Nvidia was a 5 times speed up. So 5 times, not 5%, not a little amount, but 5 times. So there we began to leverage the Nvidia GPUs together with some of their CUDF or software, combining it with our Watson X data. And the example we used was our client Nestle, where together we managed to get that speed up across their massive amounts of data, and that really is important. In that case, combining some of the technologies we work on also in open source with the Presto data engine, Nvidia, and the example at Nestle, but then we're very excited. We're going to do more work on that and then take it into the market and take it out to hundreds of clients from there.
IBM CEO Arvind Krishna speaking with Bloomberg's Caroline Hyde. Now, we're also watching in China Tencent because its ADRs in the U.S. session fell ahead of its earnings report later today. Investors setting an increasingly high bar to clear amid concerns over AI valuation. Let's bring in China correspondent Mingmin Lo in Hong Kong. Mingmin, so investors are already punishing the stock even before it's released its earnings.
That's right, and that shows you that there is a lot of market jitters ahead of this huge, very important earnings that we are getting from both Tencent and Alibaba tomorrow, because Tencent's shares did decline after 5 of its last 6 quarterly earnings, despite clocking double-digit gains in revenue over the past year. And there is this concern around AI valuation, and that is put in sharp focus now, given the latest enthusiasm around OpenClaw, because analysts have been warning that the use of AI agents, the sheer amount of computing power that is required to run them would mean that it would be a major drag on margins, that it would even extend the losses in API pricing, because over the past few years there have been a major sort of price competition when it comes to API pricing. Although the good thing is that for Tencent, starting from March, they raised their API pricing by triple-digit in terms of percentage points, so that perhaps might quell some of the investor concerns around the sustainability of its operating model right now.
What about the core revenue from gaming advertising? What are the expectations there?
So the consensus from the street is that we would see a double-digit gain in revenue from its core advertising and gaming revenue. So that sets it apart from the likes of Baidu, for example, which is seeing its core revenue really taking a hit. So that also provides the cushion that Tencent needs as it invests heavily in AI. So we'll be watching as well for any management commentary on CapEx spending, whether they will be raising that. How high is that number? Because so far Tencent has been quite prudent. They have not matched the sort of triple-digit 300 billion yuan or so investments that Alibaba has announced. So that's one thing to watch. But for now, investors seem to be betting heavily on Tencent, given that it has the most robust tech ecosystem. With the WeChat app, it's seen as that all-in-one app with many different mini apps on it, which gives Tencent that trove of data. And if Tencent is able to roll out its own AI agent that is fully integrated with Tencent, that would make it a front runner potentially in making this a one-stop AI assistant, which is clearly Tencent's ambition.
Bloomberg's China correspondent Min Lo there. More ahead on the Asia trade. This is Bloomberg. we've had some leadership changes being announced so far in the Australian session, which has seen a couple of those movers. BHP Group is amongst them. The new CEO, Brendan Craig, saying at a media briefing at the moment that the company must maintain discipline. We continue to hear comments from Brendan Craig, this after he was named as CEO to follow Mike Henry. We know that the business priorities will really be on copper as well as potash fertiliser. This as iron ore continues to slow, the Chinese economy continues to slow, and mining costs continue to rise as well. So that's one story that we're watching at the moment. But of course, across broader commodities, the main story remains oil, crude holding the advance as we have had further developments in the Iran war. Iran confirming the death of its security chief is the latest further intensification of this conflict that continues to roil global markets. We're seeing Brent crude actually at the moment reversing some of those gains. New York traded crude at least off by 0.8%. We are continuing to watch that supply side issue when it comes to Asian economies in particular. Let's bring up Bloomberg oil trading reporter Rong Wen-Yo, who joins us in Singapore. So we know that this part of the world is sort of seeing an outsized negative impact. Refiners are really looking all across the globe for oil with these Hormuz flows essentially halted, other than, of course, just a few specific vessels that are able to get through. Where are they finding alternatives at this point?
So when we talk about alternative supply routes, of course, it differs from country to country. If we talk about some of your North Asian countries, like Japan, for instance, which is highly reliant on Middle Eastern oil supplies, therefore, of course, bear the brunt of much of this disruption that's going on in the Strait of Hormuz. And when we talk about other refiners or oil importers here in the wider region, we have also heard that there could be Southeast Asian players that could be interested in the Russian crude that was essentially released by the US government when they announced the expansion of the waiver over Russian crude just last week. So these are the varying factors that different refiners are looking at. Of course, today's oil markets came off quite a bit. Came off just a bit. Of course, it's a reversal of the rally we have seen earlier in the past couple of weeks. I think a bit of the relief comes from the fact that there was a major announcement from Iraq and Kurdistan that they could resume exports via Turkey, so that alleviated a bit of the pressure. Of course, there's also US President Trump's announcement that they plan to export more Venezuelan oil. But do note that the distance from Venezuela to Asia is by and far pretty long, and with really large and expensive tanker freight rates. That's not seen as a very viable alternative just yet, but it's also a sign or hint at the kind of relief that the market could potentially look at.
Could that, though, especially Venezuelan crude, difficult for Asia, but perhaps release some more flows from other parts of the region? What are the implications of having more Venezuelan crude, even more Russian crude in the markets, Iraq crude as well, given that, of course, geopolitical tensions around those countries raged just before the Iran war as well?
Well, if we take a step back, any injection of crude in terms of with a sizable volumes being injected into the market would be good news for the market. So if you could imagine neighboring countries around Venezuela taking in more of the heavy crudes, that kind of frees up some of the crude that potentially Asian refiners could take. But all these have been established, I would say, supply chains and trading routes, and it would take some time for every player in the logistical supply chain to kind of get used to what's happening in the market right now. So all these, I would say, such injections would definitely help the markets, but it would take time for its effects to show itself. Now, of course, when we talk about other crude, like, for instance, Russia, actually here in Asia, India and China are huge importers of Russian crude ever since the outbreak of the Russian-Ukraine war. And with these two major importers, if they are able to get their hands on more Russian crude, if you look at it further down, that would mean that it would kind of free up more of your other mainstream crude grades that other Asian refiners could potentially take as well.
Yeah, this scrambling for oil will continue, I guess, until we see some resolution in Iran. Bloomberg oil trading reporter Rong Wen-Yo, they're joining us from Singapore. More ahead on the Asia trade. This is Bloomberg.
Questions are.
Take a look at how Korean insurers are trading at the moment, because we have seen some positive sentiment across the board in Korean markets today, especially coming from the tech sector. But we're also following the insurance side of things, because we had the likes of Morgan Stanley, for example, raising Samsung Life to overweight. So these are some of those companies that we're following very closely, as we're, of course, keeping an eye on the broader bond markets as well. South Korea's government bond market, for example, has been one of the worst performers around the world. But it is really the expectations around inflation, central bank policy. Globally, that's really having an impact also in the credit markets, especially that sell-off that we're seeing sparked by the Iran war, prompting money managers to buy oversold investment-grade bonds. That's as global credit spreads are at their widest since June of 2025, following this broader rout in risk assets. Let's bring in Asia credit editor Finbar Flynn. Finbar, so not everyone necessarily convinced to buy the dip, though.
Yeah, that's for sure. I mean, spreads were super tight for so long. We've seen about, in terms of the size move, a 25% or for high yield in a move, but for IG, it's about a 10-15% move. So talking about 70 basis points to near 90 basis points now. I guess with credit, they were tight for so long, and there was a reason, because people believe the fundamentals of these companies are good. So they see an extra 20 basis points, 15 basis points, or some people are going in.
Where?
Yeah, it's a good question. So you have a number of choices. The banks, you see yields have gone up again, so that's good for banks. And you also have a lot of people going into harder core type stuff like utilities and telecom. And these aren't going to go away anytime soon.
Are we seeing some regions preference, for example, over Asia, Europe, the US?
Yeah, it's an interesting question, because we have a lot of news on how Asia's bearing the brunt of the oil crisis. But spreads here in Asia actually are tighter now than in the US or in Europe. And that's traditionally not the case. You know, Asia's an EM market, so it's always been about, 10, 15 basis points more. But this time, Asia's about 10 basis points lower than those two markets.
What should we be looking out for?
Yeah, so obviously we had another story today on the Australia market. So these markets are only open for certain chunks. You can tell by the days, good days, bad days. Amazon priced 54 billion last week alone. So we have to keep an eye out for what the developments are going to happen in the war. That will close the markets again in terms of shorting primary markets if it escalates. But people are still rather sanguine in credit, to be honest.
Yeah, this record Aussie bond sale situation really trailing their global peers, right? We can blame the war for that. Our Asia credit editor, Finbar Flynn, there. The top corporate stories that we're tracking this hour, and a group of banks led by JP Morgan Chase has halted a $5.3 billion debt deal for Qualtrics International. Sources say the lenders paused discussions after investors balked at Qualtrics' exposure to the software rout. Qualtrics' existing loan has slumped to about 80 cents on the dollar in secondary trading. Unilever is said to be considering a separation of most or all of its food assets as it looks for ways to streamline its portfolio. Sources say the transaction will probably value the company's food business at tens of billions of dollars. We're told the company has not made any final decisions. Boeing has signalled that several performance issues will weigh on its first quarter results. The plane maker says it's delivered fewer wide-body aircrafts than planned and cited wiring defects on the 737 MAX as another headwind. It's also pushing back by a year its goal of generating positive margins at the key commercial plane unit.
You don't get access to all the information until you actually close, and so there was cost. Their cost was higher than the price that they were getting from us, and so we had to reset the margins at BCA as a result. But again, that's a short-term headwind. I think that we'll be able to work through that. When you think about longer-term cash flows, that really won't get in the way of us being able to generate the types of cash flows we've talked about.
Lululemon has forecast a second straight year of profit declines, further pressuring a brand that's dealing with product mishaps while searching for a new CEO. The midpoint of its sales forecast also missed the average analyst estimate. The performance gives founder Chip Wilson ammunition as he calls for strategic changes and an overhaul of the company's board.
And take a look at how markets are trading in the Asia session. We're still early in the session, but we're seeing broad upside with the Nikkei gaining more than 1.5%. And this, of course, after 4 sessions of losses already, given the uncertainties over the Iran war and oil prices. This will continue to reverberate. But at the moment, we're seeing that upside potentially also coming from the tech sector, given that we have seen that optimism again play out by Nvidia CEO Jensen Huang talking about revenue topping $1 trillion. And that's really helping the picture in South Korea as well. You can see the Kospi rallying more than 3%. It was already seeing its highest trading level since the beginning of this month. But do keep an eye on the Korean won as well, because we're very close to that 1,500 level against the US dollar. It's an important week for South Korea. We do have more than 2,000 companies holding shareholder meetings. And this is a market where we're seeing the government really push for those corporate reforms. So we'll be watching those shareholder proposals, activist campaigns as well. This is an economy also that saw the jobless rate tighten a little bit in the previous month. We're talking about the rate at 2.9% for the month of February. Also, the trade balance going into the black in Japan as well. We're seeing a surplus of more than 57 billion yen at a time when in Japan, of course, we are expecting the Bank of Japan policy meeting, a hold expected for that decision. Very different from what we saw from Australia, back-to-back rate hikes coming from the RBA, Haidi. Of course, we've been watching the Aussie very closely in your neck of the woods as well.
Yeah, we've seen quite a bit of whipsaw action, Shery, as you mentioned, just trying to kind of price in what the RBA's journey looks like for the rest of the year. Of course, it was not really expected to be a consensus move because there are really strong arguments on either side of either a hold or a further hike yesterday. They, of course, chose to move forward. There are, of course, concerns about, potentially having these inflation expectations, the psychology of that being deeper set more quickly within this economic environment. But, of course, such a fragile global environment to be contending with at the moment as well. We are seeing a positive picture when it comes to futures as we head into the start of trading in Greater China.